Are we still on a dollar-backed system if gold's the biggest reserve asset? And I think, it'll be a dollar-centric system, but it'll be gold-based, not gold-backed, but gold-based. But so I still think gold has, a lot of upside on a number of different metrics, whether it's the number, that you need to, the balance, China's trade balance, right? So 2024, China ran a $990 billion trade surplus. Everybody says, oh, it's unfair. It's unfair. Well, China imported 1,300 tons of gold. $22,000 an ounce, China runs a flat trade balance, right? So that's $22,000 is where we got to beat a flat balance. That has very important implications for the dollar were that to happen. You look at it relative to commodity market.
Gold is quietly becoming the most important asset in the global financial system, and Luke Gromen argues that most Western investors still don't grasp how quickly this shift is unfolding. Luke Gromen argues that gold remains deeply undervalued relative to the scale of global debt and historical reserve norms. With U.S. gold holdings covering only a fraction of foreign-held U.S. debt, and with China and Russia unwilling to hold long-dated treasuries while in strategic conflict with Washington, he sees gold's role in global reserves continuing to grow. Central bank accumulation and gold recently surpassing treasuries in FX reserves point toward a moment likely within 1 to 2 years when gold overtakes the dollar itself as the largest single reserve asset. Luke Gromen further explains that reshoring, geopolitical rivalry, and commodity dynamics make U.S. debt an increasingly irrational reserve choice for nations outside the U.S. bloc. China's massive gold imports, its ability to balance trade at far higher gold prices, and the tiny size of the gold market relative to global commodities all reinforce why gold is gaining traction as a neutral settlement layer. In this environment, he argues, gold is replacing treasuries not because of sentiment, but because the structure of the global economy leaves governments with no safer alternative. Luke Gromen noted that BRICS nations are pursuing this transition because they know the U.S. cannot enforce the old order through conventional military means. America's rare earth constraints and limited industrial war capacity mean it cannot stop the shift toward a more multipolar, commodity-anchored system. As a result, gold is set to play a far larger role in global settlements, and the dollar's dominance will shrink, not collapse, but evolve. In Gromen's view, the revaluation of gold is not merely likely, it is already underway. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Yeah, I continue to think gold is the cheapest asset on the board. I say that because it is still, with this huge move, at 11 or 12% of the market. The market value of U.S. official gold is still 11 or 12% of U.S. foreign held debt outstanding in total. And long-term average is 40%. 1989, when the Berlin Wall came down, it was still 20%. Dollar crisis in 1980, it was 135%. So I think it is still by far the cheapest asset on the board. In terms of why I think it's still, I think, and I said this at the time, we saw that pullback. We saw the VAT and China issue. It's two simple questions for me in terms of gold. Is gold still a buy? A, do I think the United States has made a decision to allow China to build its entire military for it and critical rare earths, all of it, just offshore the rest of it, in order to defend the bond market? And the answer is there's no chance of that happening. Question number two, do I think China and Russia are going to make a Yeltsin-like choice and make themselves economic vassals of the U.S., sell all their gold, replace it with treasuries, and hold 10-year treasuries yielding 3 or 4% when U.S. debt issuance grows 8% CAGR as it has since '08? And same thing, I think there's 0% chance of that happening. And so as long as we are continuing to try to reshore, the world needs a new reserve asset, because you would have to be an idiot to own, to be reserving as a sovereign, particularly one who's in conflict with the U.S. The long-term treasuries, the long-term bonds of the U.S. Treasury, when the U.S. is A, in conflict with you, and B, literally borrowing money to buy commodities. You should just buy commodities or something that better represents a commodity proxy, which is gold. Gold has risen significantly in commodities over the last 3 years, over the last 5. It's tripled in the last 3 years, the gold S&P commodity ratio, Goldman Sachs commodity ratio. It's up more than that over the last 15 years. And so as long as we're continuing in this direction, gold, which just went over Treasuries in global FX reserves, I think it's going to continue. And I think within 1 to 2 years, we're going to get a headline that says gold is now bigger than US dollars all in global FX reserves. And that'll be a combination of price, and it'll be a combination of continued tonnage from central banks. And that's going to be, I think, a really interesting moment in time that's going to trigger a lot of cognitive dissonance among sort of, the US dollar uber alles crowd, which is what are we still on a dollar backed system if gold's the biggest reserve asset? And I think, it'll be a dollar centric system, but it'll be gold based, not gold backed, but gold based. But so I still think gold has, a lot of upside on a number of different metrics, whether it's, the number, that you need to, the balance, China's trade balance, right? So 2024, China ran a $990 billion trade surplus. Everybody says, oh, it's unfair. It's unfair. Well, China imported 1,300 tons of gold. $22,000 an ounce, China runs a flat trade balance, right? So that's $22,000 is where we got to beat a flat balance. That has very important implications for the dollar were that to happen. You look at it relative to commodity markets, it's still, the oil market alone is still 6, 8, 10 times bigger than the gold market in annual physical production terms. So I think, gold is replacing treasuries in global FX reserves. I think people are starting to admit that now after years and years of it being very obvious. But I think it still has a long way to go. The depression and acceptance of this is, I think, what is understood at high levels in Beijing and across much of the BRICS, which is the Americans cannot go to conventional war with us to stop us from changing the rules-based global order in the way we want. And so we have a window and we're going to do it. And I think, what does that mean for markets? They want gold way higher. They want gold as a neutral settlement asset. They've been saying it for 16 years, since after the great financial crisis. They want non-debt based, non-national debt based, neutral reserve asset. They've been saying it, BIS white paper, et cetera. And the depression and acceptance part is this sort of, well, ultimately the U.S. military backs the dollar. Well, what ultimately backs the U.S. military is rare earths, and they ain't coming. And so you can't. We saw it, with this summer was a big moment, right? We ran down 10-15% of our high-end air defense missiles. Defending Israel from Iranian missiles. Everybody knows we can't go to a full intensity industrial war for more than a month or two. And if that's the case, we're going to get either rules-based global order change to the markets, and the dollar is going to have a reduced role within that, and gold's going to have a much bigger role, or we're going to have nuclear World War III. And I'm confident that it's more the former, not the latter.
Luke Gromen argues that owning both gold and Bitcoin is essential because each plays a different role in the shifting global monetary system. He believes the U.S. push for stablecoins only works if Bitcoin becomes much larger, since emerging markets won't hold zero-yield digital dollars without converting some into Bitcoin. Meanwhile, BRICS nations are clearly building a gold-based reserve structure that will grow far bigger over time. For individuals, he suggests allocation should match volatility tolerance. Younger people can lean heavily into Bitcoin, while older investors should hold mostly gold for stability. He emphasizes that the success of one asset does not come at the expense of the other. They serve different needs in a bifurcating global system. Luke Gromen also warns of a deep disconnect between Western policymakers and the realities of industrial supply chains, especially around rare earths. He argues that the West spent decades prioritizing finance over engineering and is now facing the consequences. Strategic materials, production capacity, and infrastructure take years or decades to build, not months. China understood this long ago and positioned itself accordingly, while the West relied on wishful thinking and assumed supply would always be available. This mismatch between political assumptions and physical constraints now shapes global power dynamics and reinforces the need for neutral reserve assets like gold and Bitcoin. Let's get back to the interview.
To me, this whole stablecoin gambit that we seem to be trying to run as a country, the more and more I look at this, the more the only way it works is if Bitcoin is a much bigger number. And to me, it feels a little bit like we are, sort of not saying the quiet part out loud, which is, yeah, we want stablecoins. We're really trying to stand up Bitcoin as a competing reserve asset to gold, because who's going to hold 0% yielding stable coins at, the Europeans? Not really. We can threaten about guaranteeing things, but they're already taking steps, putting capital controls to prevent outflows. Myron yesterday or 2 days ago said, well, we're not targeting the Europeans, not targeting developed markets. We're targeting, emerging markets. Well, great. Like how much money is really in Africa? How much money's really, right? Are they really going to finance our deficits for 3 weeks in bill markets with stable coins? And oh, by the way, it relies on them not turning around and buying Bitcoin with the stable coins, which is what they're going to do with at least part of it. So I think you want to own both. And in terms of the balance, I think some of it depends. For me, I have them probably half and half, and I try to kind of maintain that. But I think some of it depends on your volatility tolerance, and that depends on your profession, number one, in terms of the audience here, and also your age, right? So my kids, I just keep telling, buy more Bitcoin, have a couple gold coins. I'll give them a couple gold coins for Christmas, whatever, right? Or a gold coin for Christmas. But buy Bitcoin, because I feel like by the time they need that money, that probably they can withstand the volatility. They don't need the money. They're still on the bank of mom and dad mostly, and what have you. Older people, I think you should mostly be gold, because you can't have that volatility. It's much more proven. I think, look, if I was 65, I'd probably have 95% gold, 5% Bitcoin. And you know what? If Bitcoin goes to zero, not that I think that's going to happen, who cares? And if it does what, a lot of people think it could do, then hey, great. It's going to be a really nice kicker. And I don't think the success of one is mutually exclusive relative to the other. I think, to my eyes, the East BRICS, Global South are clearly, gold is the new reserve asset. It's way too small to be used. It's going to get bigger. Bitcoin might be being used in the West. We'll see. But it's a neutral reserve asset for the people, energy tied either way, which I like. It's fascinating to me, the level of denial around sort of this situation. And it's kind of migrating into anger at times, even bargaining, right? We've gone from, oh, whatever, we don't have an issue. And they're oh, now we do have an issue. Those Chinese, they cornered rare earths. They did it. No, they didn't. I mean, they did, but they weaponized them against Japan in 2010. Where were you? What world were you living in that you thought that, oh no, it'll be fine, they will never use them against us? I think ultimately there is a massive gap between Western policymakers and most Western market participants, and reality of what it takes to build a supply chain. And and I'm guilty of this too, right? I could have gone in engineering, could have gone in finance. It's a lot easier, could get good grades, could go out to the bar 4 nights a week than all my friends in engineering who were, busting their chops studying. And oh, by the way, I was going to make more money than them when I graduated, which everybody knew in 1993. That was the deal. And most engineers ended up in management anyway. So why not just go straight to business? And you're now seeing the impact of that. And that's what's driving this gap, right? There's this view of I'm going to pick on Besson. We can do warp speed. Okay, we'll do it like we did the vaccines. When you really look at those, they actually started being developed in the 60s and the 70s and furthered in the 90s. And then the first one, mRNA, got tested in 2013. And so there's this magical thinking that someone just pulled that out of their rear end in 2020 and had it ready to the market in 10 months. And it's simply not true. You're seeing it in terms of someone was telling me about a project where we're going to go into the mountains in, I don't know which Western state, and there's a whole bunch of rare earths that we're going to pull them out. And, I have a friend who goes okay, great. Where's the rail line going? Where are you getting the steel for the rail line? Before you even lay the tracks, where are you getting the electricity to run the power, to run the shovels? It's magical thinking. And I think ultimately this dynamic that we're seeing with China in the trade deals, I don't think so much, I've heard a lot, well, China was hiding by it and then Xi got it big for his britches. I'm not sure. I think what we're learning here, it's not that Xi got big for his britches and overplayed his hand. I think Xi carefully calculated.
Gold is steadily reasserting itself as the anchor of a shifting monetary world, driven by geopolitical fractures, declining confidence in long-term U.S. debt, and the physical constraints limiting Western industrial power. Central banks continue to accumulate gold, reserve compositions are tilting away from treasuries, and sovereigns seeking neutrality are moving toward an asset immune to political pressure or default risk. As this transition accelerates, gold's role as the core settlement layer of a new global order becomes increasingly clear, its scarcity and strategic importance positioning it for far greater relevance and valuation ahead. How might global reserve allocations shift over the next decade if gold continues to replace long-dated U.S. Treasuries as the preferred neutral asset? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.